The US withdrawal from the deal has left the EU and other countries in a difficult position. The withdrawal of the US from the global tax deal, the Organization for Economic Cooperation and Development, OECD, had been working on a global tax deal to address the growing issue of aggressive tax avoidance by multinational corporations, particularly tech giants. The deal aimed to create a more level playing field for all countries and prevent large corporations from exploiting loopholes in tax laws to minimize their tax liabilities. Key provisions of the global tax deal: the deal would have required multinational corporations to report their profits and pay taxes where their economic activities are performed. The new taxation rules: a shift in perspective. The Indian government has introduced new taxation rules that aim to bring transparency and fairness to the taxation system. The rules, which are expected to come into effect soon, will set a new template for tax officials to objectively compute the extent of profits that can be attributed to offshore companies. This move is a significant step towards addressing the concerns of taxpayers and ensuring that the tax system is fair and equitable. Understanding the new rules will require tax officials to compute taxable profits attributable to the Indian market. This means that tax officials will need to analyze the financial statements of offshore companies and determine the extent to which their profits are generated in India. The complexity of profit attribution in India: the concept of profit attribution is complex and has been a subject of extensive litigation in India. The lack of a universal and consistent approach for apportionment of profits has led to numerous disputes and challenges in the Indian legal system. This complexity arises from the fact that profit attribution is often linked to the concept of partnership, and the laws governing partnership are not uniform across the country. Key challenges in profit attribution: lack of clarity in laws. The laws governing partnership in India are not uniform, and there is a lack of clarity in the provisions related to profit attribution. Variability in accounting practices: different accounting practices and methods are used by various partners, which can lead to discrepancies in profit attribution. Difficulty in determining the share of profits. Determining the share of profits among partners can be challenging, especially in cases where the partnership agreement is unclear or missing. The OECD Global Tax Deal: a new era for multinational corporations. The Organization for Economic Cooperation and Development, OECD, has been working towards a global tax deal for several years. The deal aims to reform the international tax system, making it more fair and efficient. US-India tax deal faces uncertainty amidst withdrawal and global economic shifts. The background of the US-India tax deal: the US-India tax deal, also known as the Tax Treaty or Double Taxation Avoidance Agreement, DTAA, was signed in 1997. The agreement aimed to eliminate double taxation and fiscal evasion between the two countries. The treaty has been in effect since 2000 and has been amended several times to address emerging issues. Understanding the profit attribution framework: the profit attribution framework is a crucial component of the Goods and Services Tax (GST) system, designed to allocate the tax burden fairly among businesses. The framework aims to ensure that the tax burden is distributed in a way that reflects the actual contribution of each business to the overall tax revenue. In this article, we will delve into the factors that the department will consider when attributing profits, and explore the challenges that need to be addressed to ensure a smooth implementation. Key factors in profit attribution: the profit attribution framework takes into account several key factors, including sales. The revenue generated by a business is a critical factor in determining its share of the tax burden. The department will consider the total sales of each business, as well as the sales of its various products and services.